Hi, my name is Pranav Mehta. I'm the academic head of Clat Tutor. Let's come to one more interesting topic. G7 has come up with the concept of corporate minimum tax. Okay, so let's fundamental thing. Let's understand why this has come up by taking an example, and we will understand whatever proposal has been proposed in this forum now. Okay. Now, if you look at all those big smart companies, what they do is that they have an operation in a particular country. And once they become a very big company, what they do is that they try to shift their head office or basically main operations in certain countries where the taxes are low. So take an example. If we have a company, Infosys like of company or an X company in India, and they become a very big company, then they will try to compare the tax in some 10 different countries, and then they will try to understand which countries offers them the lowest tax, and then they try to shift their base in that particular country. Okay, this is how they save tax. So that has been a general practice in all these countries are facing now, and big companies have been doing this for a good long time. Okay, they usually settle their basically head office in an island which is okay with some 5% tax, 6.5% tax. So you will be able to see that there are many examples, including your BCCI or what do you call Google like of company or Microsoft like of company. They have been having certain operations in these small islands where they end up paying very less tax. Now, if you look at the COVID, what COVID has done is that it has made all the financial dent to all these big countries. Okay, so all these big countries requires now money because they have announced there are a lot of the packages for the different sectors, so they require money. Now they are understanding that how we are going to generate money. So they know that one of the tool comes out of that, why don't we tax these companies? So you'll be surprised to know that Amazon, such a big company, they started paying tax in 2018, and their operations, if you look at when they started, it is 1994 or 1996. So imagine good some 20-25 years, you can see they have not paid tax, right? So in this case, now a particular country understands that why don't we start taxing these companies. Now, what has been proposed now by the US comes out to be that why don't we have a minimum corporate structure, that means minimum tax for all these corporate. Okay, that is what is being proposed now. So this has been floated in the smallest forum, that is called G7. Now this is now being discussed in the G20s, which is going to materialize in the couple of months, and followed by the larger group, which is going to be OECD. Okay. Organization for Economic Cooperation and Development. Okay, so there are 140 countries in that. So what this means is that just for the factual understanding, let me explain it that G7 is approximately, it covers some 40% of the world economy or world GDP, you can say. Okay. Now, what has been proposed by the US in this forum comes out. Let's have two steps. That means step one and step two. Step one, they have also stated in some of the forum as pillar one. Okay, so don't get confused with the step one and the pillar one and the other factors. So just imagine in the first stage, they said let's have a flat 15% tax, corporate tax for all these companies in all across. If the proposal goes into these 140 countries, so all countries are going to have equal base as 15% as the flat tax for any company. So that means if Google is there, if Google try to shift from US to Singapore, so Singapore is also going to tax 15%, and if they are in the US, they are also going to pay 15% flat tax. Now, this is one structure of this. The second structure, what they are talking about is that what they do is that all these big companies, big tech firms are having their operations in multiple locations. So if you look at Google is present in Europe, Australia, Asia, and all the Middle East, other countries. So they are present there. What they do is that they try to take the money from the Indian economy and park it in an island where the tax is low, so they don't end up paying tax in India. So what they said that now in the structure two, that means the step two, what you do is that you have to share certain part of your revenue, that means revenue or you can say tax, to these countries where you have the operations. Okay, so that means this is what is being proposed in the second pillar or the second step. So that means in step one, you're going to pay flat 15% of the tax, whatever has been on the revenue or whatever the profit and the other factors is being discussed about. But in the second step comes out with that you have to share certain part of your operations revenue or the profitability with the countries where you have the operations. So this is what is being floated in this proposal. In the present scenario, this has been to great extent codified, or basically consensus agrees for the G7 group. So G7, as the meeting has ended last month. So now this is being taken for the G20. So G20 is going to look forward to the meeting in the next couple of months. Followed by this year end, you will have OECD meeting. So where all this consensus for the 140 countries will come. One more background to this comes out with that you will realize that what has happened is that before this global minimum corporate tax coming into picture, there are a lot of countries which came up with the idea of taxing these companies in a different way. So for an example, if you look at France came up with a tax called GAFA. So GAFA stands for Google, Amazon, Facebook, and Apple. Okay, so they came up with the GAFA tax. So that means flat, I think 3% you have to pay on your revenue, because these companies were very smart that they were not reflecting their profits in the balance sheet. So it was very hard to gauge what is their profit and what is their loss and other factors. So so the government said flat on your revenue, you please end up paying 3% of the tax. Okay, India came up with a term called equalization tax, digital tax. Okay, 3% on 3%, 2% equalization tax. Certain part has been levied on Google, Amazon to look forward to making the equal towards the local player which are there in India. Fine. So that was that type of individual taxes was being planted by every individual country: France, UK, Australia, India, Italy, Spain. So they were coming up their own taxes. So this was also cluttering the complete movement of these big tech firms. Okay, so this is a good move. I have taken one more example, like Ireland, and like of country which is part of the European Union, and they might not be ready to be part of this. But let's see how all this translate, because when you have a bigger group which all agrees, then these small countries also has to look forward to abiding by the corporate tax structure. Okay, so Ireland has a structure of 12.5. So you'll figure out that all those big giants like Microsoft or Google, like a country, they have their head office in the Ireland. So certain part of their revenue they shift it over there to save on the tax aspect. Fine. So in India, the corporate tax is 15%. But when you look at the chess and the other charges, what we revise, it approximately works out with some 17.5% corporate tax is being practiced in India, right? This is what was there in the discussion for today's topic. In case you have any doubt pertaining to this, you can mail me at hello@clarity2.com. You can download the PDF from our Telegram channel as well. And thank you. Have a nice day.